fairly good sign that we are going to attempt to move down into this lower Fibonacci trigger zone down here. That's the 0.25 to 0.175. So in reality, folks, failure up at this area would be a very strong move, potentially to the downside. Let me get rid of some of these things. These are some of my earlier predictions. And now you have to understand that we also have this move from this low all the way up to this high. And what we would be looking for again is those failure zones, which would be in this area here and in this area here. Notice how they kind of align. So we have an area right in this area. Whoops. Oh, much better. Look at that straight line. Geez. Someone smacked me in the head this morning and gave me the ability to draw. And that level. So let me make them bright red and bright red. So really, folks, we're looking at potentially this 5,800 level on the ES, which would equate to about 579, 575 on the S&P, moving down here into this 5164 level, which would equate to about 515, 520 on the S&P. And that's the range we're looking for. Once we get below this area, I think there's a pretty good chance we could move, strongly down here to the downside. Just a matter of, do we get that rollover? Do we get that breakdown? Or do we consolidate up into a rolling consolidation before attempting to break higher? We'll see how it plays out. I mean, right now, there's a lot of uncertainty going on. The Fed came out just yesterday, basically said that inflation concerns are there, uncertainty is there. They're not, they indicated potentially 2 rate cuts, potentially, I think it was next year. But my opinion is, if inflation continues to be persistent, then the Fed's most likely going to be raising rates, not cutting rates. So we will see. They're being optimistic, in my opinion, saying that, well, we're hoping for a broader slowdown in the market, but they're not seeing it yet. And it's going to be a matter of time to see what actually happens.